Hello, welcome to the quick weekly update. Right now in front of my screen I have the Nifty 50 index. So it is very clear just by looking at the chart that the advance from the COVID lows of 7500 has ended over around 18,600 levels, and whatever corrections we are seeing after that level post the 18,600 high is not at all a routing correction. It is a correction of a higher degree, and that is the correction is itself retracing this entire move from 7500. So now the main question which we might have is in what leg are we in that correction? So loosely speaking, if I plot these rises just as an A B C correction, then I can in a very simple way label this A B C correction as a W wave, and then this 3 wave move as an X wave. So at this point where we are labeling this as a C wave, I had this doubt in my mind that whether this rise is going to be a 5 wave impulsive rise. So I first labeled this as a wave 1 and this as a wave 2, anticipating that the wave 3 can all the way take us to the all-time high levels. But that did not happen, and I changed my view that the 3 wave bounce, counter trend bounce, is just an X wave, and then we are again going to fall lower. So the correction, the advance, the uptrend is completed, and we are in the correction. So now if we take this as a W wave and this as an X wave, then we can label within the Y wave, that is the next Y wave, I can label the subdivisions as an A wave and this as a B wave, expecting that the markets to go lower, say towards 15,000 range and lower, towards wave C, and that would complete the correction, the Elliott wave correction. And that doesn't mean that the correction might stop there and we are again heading towards all-time high. There can always be some other alternatives out there. So this could be the A wave and this could be the B wave, and there is a possibility we could head lower towards wave C. So what levels are we looking at? So if I take a Fibonacci extension, and those levels come anywhere between 14,900 to 14,400. So this is the broad 500 point range where the index can be seen taking support once we cross below the weekly low. That is the weekly low is around 16,440. So let's take that around 16,400. Okay, so 16,400 is one of the important levels to be we should be looking at, and once we close below 16,400, our next level to look at is this weekly swing low, which is around 15,700. So you close below 15,700, you have around 700 to 1,000 points of room for downside. So that was on the Nifty 50 index. So Nifty 50 index, as you can see, it's closed in green. But if I take you to the Bank Nifty index, we can see that the Bank Nifty index has closed in the negative territory. The charts and the counts are same, 1 2 1 2 3 4 3 4 5, meaning that the uptrend is over and we are in a bear phase. So in that bear phase, W correction is over, X is over, and we are currently in Y wave. And even in that Y wave, if we subdivide, I can label the first leg as an A wave, second leg as a B wave, and third leg as a C wave. So for example, just to show you the perfect levels, if I take the height of the A wave and if I add that to the B wave, then the downside targets come near 30,000 levels. So that is around a 5,000 point cut, and it can happen once we start to slide down, and once we see that 5 wave impulsive down move either on the hourly charts or even on the daily charts. So that would make the stage a lot clearer than it is right now. Okay, so if I take you on to the daily chart, we can see that this is not an impulsive. I can't take this as a 1 2 3 4 5 here. I can take this as probably this as an W wave X, then ABCY, some sort of this action, and this looks a truncated wave X. So I am more comfortable in taking the B wave to the top of the high of around 35,958. So that looks complete over here. So the next question we might see is what should be the trigger point. So the trigger point should be, first is not to cross above this candle's high. So this candle looks like a weapon to me, and if we do not cross above 35,958, there is a very good chance that we may slide down towards wave C. Okay, and talking about few sectors, I have been very bullish on the auto sector, but with the wave counts that I am having on the Nifty 50 index, it is also showing me that there is a risk in the auto index as well. So Nifty auto. So this is the auto index chart, and overall we have completed a 5-wave advance, 1 2 3 4 5. So according to my report which I had written on the tradewithsarthak.com, you can see that I have labeled this as a W wave, this as an X wave, this as a W wave, X wave, and a truncated Z wave, meaning that the wave 2 correction is over. But what if this rise right from the 9200 lows, this rise is just a 3-wave rise, and I can take this as an X wave. So that gives me WXYX, and then again we can have a Z wave down. So that is a sign of concern, and it looks to me that it can happen. There is a possibility that can happen looking at the Nifty chart. Okay, and even in this rise, I can't take this as a 1 2 3 4 5. Fourth wave has entered into the territory of wave 1, and even the wave 3 is smaller than even wave 1 and wave 5. So I can't take this as an impulsive wave. So it would be important to see what the Nifty auto sector does in coming days, and but from a long term perspective, since we have completed a 5-wave advance, so 1 2 3 4 5, so it doesn't matter if we are going down for a Z wave to previous lows of 9200, and then again we are going to get a bounce. What we can say with a high probability is after the correction is over, we are heading towards at least 16,000 17,000 levels, where we can see that wave third going higher. But it is very difficult at this particular point of time to predict if this is a 3-wave, or are we just going to extend in a 1-2-1-2 fashion. Okay, so but there are few stocks which have outperformed. I have this count on Hero Moto Corporation. Where it looks like we have done this wave 1, wave 2, wave 3, wave 4, wave 5, and this is a neat 60% correction, I think. Fibonacci, from a Fibonacci perspective, it's a we have done more than 61.8% correction. So the 61.8 correction comes around 2296 levels, and 0.78 comes around, so it's between that. Okay, so it looks like we have done this wave 1 and wave 2, and with the green monthly closes, it looks like the wave third and started, and we can head towards 4400 levels. Also there's this stock Mahindra. So there are some stocks from the auto sector as well which have outperformed, while the other stocks like Tata Motors and a few big names tend to underperform. So this looks like a wave 1 and this looks like a wave 2. So if 1 2 3 4 5 is done and we have done a major wave 1 and 2, then probably we are heading towards that wave 3, which can take us all the way till 1800 to 2000 levels. So but on the weekly chart it looks like a 1 2 3 4 5 completing. So this is a sign of concern. So there's a possibility that we may see a short term correction and taking support from those levels. Since this looks like a 5 wave impulsive move, I do not see the stock going below 674, which is the previous swing low, and all the dips could be bought out for the further targets of 1800 to 2000 level. Okay, yeah, so that was it for the video. Thank you.